It is absolutely never a good thing when markets ignore reality. They can do so in the day-to-day noise, but prolonged issues should be reflected in the markets. That's a historical fact. However, because of what the former Fed President Bill Dudley said, the stock markets are being juiced up by easy money. With such a mess going on today, anything could erupt at a moment's notice, and in some ways, that has already begun. Hang on tight, it's going to be a bumpy ride. You came here for the truth, so let me unveil that for you. Today I'm going to take you all around the world. I want to show you what's happening today with the stock market. There's some huge stuff going on. I have a lot to cover. I want to look into what's happening with Canada as well. I got a little bit on the UK. I'm going to show you some various factors, and I need to get into it right away. We've got to help the people. We've got to help the people. Do what you can. Print up those billions. Send out those trillions. Magnify it. Expand it in any way possible because the people need help, right? Well, we have seen how this money has been squandered over and over and over again. We're buying the bonds of Apple. Look at every single country. They're doing the same thing. They are funneling this money from the central bank to the government all the way through into the big corporations. The CEOs and all the executives get the cash out because the stocks are being pushed up by the stock buybacks, financed by debt, and it is a circle that nobody can understand except for you and I who look into this information on a daily basis. Suddenly, I'm feeling this sense of concern for those around me, those around you too, who do not understand, who do not look into this, and that is truly unfortunate because if they could just understand what I just spoke about a moment ago, it would be like a light bulb going off in their head, but they won't get to it. This is what I want to talk about first. The federal government is swamped with reports of potential fraud in the Paycheck Protection Program, according to government officials and public data, casting a shadow on one of Washington's signature responses to the crisis of 2020. Of course, I'm not going to be able to get into all the details, but you have to look at what's been happening here. They gave out billions and billions of dollars, and anytime they do this, just trying to funnel it through the system, as I talk about so often, they have this system where they bring it in, and by the time it makes it through, the average person only gets the breadcrumbs which have been left. There's more detail in here. I mean, you could see towards the bottom of the chart, banks are filing more suspicious activity reports, monthly counts of SARs filed by depository institutions related to business loans, and that has been spiking up recently. And why? Because they probably got wind of how to do this, how to get around it, how to find the loopholes, how to buy a new Lamborghini on borrowed money in the way that maybe it would be forgivable. They just say it was for this employee or that employee, and it's just nonsense because this is the system that they've set up. It's too big, it's too broad, it's too generalized, and ultimately people will take advantage. Some people need it. Some people are getting hurt right now today. And the unfortunate part is that when you funnel it through this system, it's never going to work out for the vast majority. All right, let's switch gears here. We're looking at the triple leverage tech ETF saw record outflows during the stock rally. Now, you would think this would be the time for everybody to pump in their money because it's a rally. But unfortunately, for some people, they don't realize what's going on. It is extremely risky at this time, at this moment. And some people have been pulling out their money. Now, does that tell you anything? I've shown this many times before. This is showing us the information as of 2020 year to date, and it's from Bank of America. They call it the asset class quilt of total returns. And it just shows you over these years, going back from 2000 up until today, giving us some insight as to what all of these different individual assets and their performance throughout that year. And it just gives perspective. That's the reason I showed this. Right now, 2020, it is what? Amazon stock? Is it going to be maybe some Tesla? Well, no, they don't break it down that far. But gold right now is the best performer, 25.1%. and it just gives, some others, S&P 500s in here further down and so on. Back in 2019, the S&P 500 had performed extremely well because the end of 2018 obviously was terrible. Looking back in 2018, everything was essentially down. 93% of assets in total were just clobbered. Cash being the best performer at 1.8%. So I'll leave this up here for you. You might not be able to see it. I know the font is quite small, but the link will be in the description if you want to check it out. All that matters today is the central banks. The central banks are really keeping the markets alive. If you are interested in any information related to what's happening today, you should be focused on the central banks. I'll tell you that right now. How the central banks are easing again. And this gives us a little breakdown from Bank of America as of October 27th right here. They're showing us the Fed, the ECB, the BOE, and so on. They are comparing that with what they say the latest information that we have. And, you got to really look at it for yourself here. But essentially, it is more printing. Does that surprise anybody? Of course not. This is what they're all doing. They're just increasing that. There hasn't been anything that dramatic. We just saw, I believe in the previous video, I showed you 150 billion coming from the BOE, which was actually an increase in what they said they would do. You don't find that too often. Usually it's much of the data that comes out is expected. But anyway, this is where they're going with this. Everybody is increasing. They will do some sort of stimulus coming out of somewhere. You always see an increase overall. Maybe they cut back for a bit. Maybe they cut back with one program, but the overall general trend is up, up, and away. Second wave of 2020 QE has begun. These numbers that you're looking at right here, 3.8, 2.4. I mean, it's just hard to believe, but these are in the trillions of dollars. So they have been expanding. It's not as if we are back in, second quarter 2020 timeframe. That's for sure. They aren't printing like that anymore, but the balance sheets themselves are still expanding at an incredible rate. So they're breaking it down here between the Fed, ECB, BOJ, and the BOE. I do think that 2021 will be a lot different than what they're showing us here, but that's according to what they've said so far. Biggest gold outperformance versus oil since 1980. Haven't seen that too often, that's for sure. This is the chart just giving us that depicted right here. SocGen did a breakdown, this analysis showing us without QE where the stock markets would be. Can you believe this right here? Look at it. It's telling, it shows you right now, today, the S&P 500 without QE is something like, it's hard to tell on this chart, but I would say in that range of 1900 to maybe 1800. Very different from where we actually are. Same situation with the NASDAQ. It's at approximately 5,000, whereas today it's well above 12,000. Now, you could see the effect of QE and how dramatic it is and how important it is and how fraudulent it really is. Two notes about Canada really quickly. Job gains have slowed. Take a look at what has happened recently. You saw the surging up of the jobs after such a bad time throughout March and so on. And then now that has been coming down yet again. They're going to need some more stimulus, that's for sure. Jump in insolvencies heralds a big hit to Canadian households. They do break this down in the article. It's not really, a red alert at this point, but I wanted to mention it because it is significant and it just ties in with the other information I was bringing to you at the beginning of this video. Like I said, it's going on everywhere. Filings increased from August to the highest since the lockdowns began. Numbers still held down by massive government support. And that's why they need a continuous increase in the amount of support that's been going on, the stimulus packages, what the QE has been doing as well. All of that needs to come together right now, or it starts to slip back down. I'm not going to get into the details here, but I think you know what I'm trying to really outline. Trudeau to begin talks with Canada Airlines on financial aid. Government says that the aid to the sector will come with conditions. Passenger levels have dropped 90%, 90% right now today. And of course, this is going to hurt the airlines. Of course, you're going to have problems in this case. The industry is massive when you look at how many jobs are affected by this. It's not just the airlines. It's not just the manufacturer of the planes. Of course, there are so many businesses connected in with it. And as a result, there's just a slowdown that cannot be stopped by giving billions and billions of dollars to Air Canada or whoever it's going to be. There, you don't really have to worry about going bankrupt necessarily because the government will always be there to bail them out. But you and I just have to pay higher taxes as a result. This is what's going on in many different industries, though. And really, the whole solution that they've provided is give a whole bunch of taxpayer money to these industries and those industries. Oh, but your industry, yeah, you might not get any. You as the individual, you might not get any, but certain ones are being protected, and it always goes to those at the very, very top. You on the bottom, you get nothing. This is extremely interesting and really goes into what I've been talking about for a long time, okay? It doesn't matter if you're just in Canada where this article is talking about, but it applies to everywhere. CMHC warned buyers not to buy a condo. Some are now officially underwater. This is in Canada where we have the biggest housing bubble in the world. You are seeing this right here. The CMHC is basically you can get a home for 5% down. You just got to pay an extra fee in insurance essentially. And this group of people are telling the buyers, don't buy a home. Now is not the time to do so. And they did it anyway. Condo buyers in Canada's largest real estate markets might be breaking a sweat in April. The CMHC warned first-time buyers about buying a condo at this time. Despite the warning, many went ahead and bought one in May. If they made the minimum down payments, there's a good chance most of their money is gone. In Toronto, after months of payments, these buyers are virtually underwater. Vancouver owners are doing a little better, but not by much. They give you all the breakdown, they give you the calculations, but essentially that paragraph summarizes what they're talking about here. If you put the minimum down, if you're one of those people, you are underwater. And that's crazy to think about because at the same time, on the other opposite end of the spectrum, what we're looking at with detached homes is that the prices have risen significantly. So there's this huge divide in between the rental market with what we've seen has been doing very badly, looking at the condo market, that's been doing poorly, and then you see the detached homes, semi-detached homes, and so on that have been performing ridiculously well. In fact, it's been nothing but a bubble. This just shows you, what has really been going on and gives you the breakdown here, charts, everything associated with that. I don't have time to get into all of it, but I just want to show you how this bubble has been forming. Canada built two new homes per person in the last quarter. Now, obviously, if you see the chart on the bottom, it shows you how it's been fluctuating and it's been really spiking up at this moment. There's some obvious reasons for this. There have been, disruptions in the supply and, you don't have new people coming in right now as a result of everything that's been happening in the crisis in 2020. But I just think it's extreme when you've got two new homes being built. Do they need to be built right now? Could they slow down on the production? Absolutely not. The bubble needs to grow. Johnson enters Brexit endgame that could define his premiership, and I just want this to end. However it's going to happen, it has just been going on for years and years and years. I'm sure the people in the UK want it resolved one way, shape, or form. Just finalize this. You could tell me if you are in the UK, what do you think? What are your thoughts on this? Because you're on the inside of it, how it all unfolded. I know that from the outside looking in, to me, it is nothing but unusual this entire period. So I definitely want to know your thoughts. I'll end the video there. If you found it informative, hit that thumbs up button. When you do, you are supporting me. Just click one button on the way out. Thank you very much. If you want to learn how to sell stuff online, I'm talking about e-commerce, you can learn for free. I give you everything. Everything that you need to learn is right here in this course. Check it out, theamazongps.com. If you want the information related to the financial system that has been literally stripped from you and the education system, you can get it here in my 2 books. The link is in the description. If you want the audiobook instead, you can get that at themoneygps.com. Don't go anywhere. Have you seen this video yet? There's so much information jam-packed into it. Definitely check it out. I'll see you there.